rather, the fear gauge moving closer toward extreme fear. So how can we come to grips when we're personally growing fearful, but you still want to stay in this market? Believe me, I know it's not easy. So let's bring in our market experts, Alan Boomer, Scott Martin, and Mike Lee. You know, one of the reasons I've been bullish beyond the fundamentals is all the cash on the sidelines. Global investors took $62 billion out of money markets. They put $51 billion into stocks, $46 billion of that into U.S. equities. So, Mike, is this a reason you think for people to remain bullish?
Absolutely, Charles. I think any dip should be bought. I think the amount of cash on the sidelines is staggering. You have $4.5 trillion in money markets. You have over $700 billion of buybacks announced. And just keep in mind, okay, when that fear and greed index is up in the 80s and 90s, that's when you want to sell. When it gets down here, this is where you want to buy. And now it's easier for me to say it than to do it, but that historically proves the way it is. When everyone's calling for a correction, that's when you want to be a buyer.
You know, Alan, you were a VP at Goldman Sachs, and then you started your own firm in 2000.
To turn the TV off. What are the things that you're looking
at? A lot of options. I'm going to get back to this old
Charles. It's definitely to the consumer.
Again, for the most part, it's been with us since 2009 on full display March of last year. This year, the S&P 500 has been holding that 50-day moving average like a champ, not just holding, bouncing off it like a trampoline. So Mike, you know, you've expressed a tremendous amount of bullishness. What happens if the 50-day fails and we start to accelerate to the downside?
Yeah, look, I don't see any sort of acceleration from that. And again, I would be a buyer on it. I'd start selling fixed income or finding other assets in other places to put more money to work. There's so much cash on the sidelines, combined with the fact that while the rate of change may be slowing, we're an expanding economy. This is a bull market. These last for years, not months. Markets don't sell off because of valuation. There needs to be a catalyst for there to be a meaningful correction. And I'd say the more selling we get, the less likely the Fed is to be active, which in my mind is the only threat to the market at this point.
I do believe the Fed is hostage to the stock market. I think they've created a monster they will not be able to control other than keeping it going. Hey, let's talk about what you're buying, Mike, because you got us pumped up, my man. We're in a secular bull market. Nothing's going to stop us. May hit a speed bump here and there. How do we take advantage of it? What's new in your portfolio?
So, hey, Charles, I'm on the other side of this interest rates. I think interest rates are going to back up here. Maybe we get a little bit higher, but then they eventually rally. Like we're in a low growth, low inflation world. So I just added some utilities on that trade, just as a low rates trade, as a kind of conservative anchor to my equity portfolio. And I also added a big position in REITs. I think the REIT sector, it's done really well, but I think that's going to be one of the last legs of this recovery. And I think the lower for longer, low interest rates really help them lever up and rebuild themselves.
All right. You know, utilities. I mean, you're a brave man. There's one utility I like, NextEra, NEE. I tell everyone, when Biden was elected, buy that stock. It did terrific under President Obama. All of these things you're trying to do means cash in their pockets. But it's a tough one, although defensive halves look pretty good over the last few weeks. All right.